Good afternoon. I'm Nicole Truog, Associate Director of the Center for Financial Security. Thank you for joining today's Family Financial Security webinar on consumers' use of mobile phones for financial management and decision making. Our presenter today is Max Schmeiser with the Federal Reserve Board, and discussants are Jim Gatz with the U.S. Department of the Treasury and Sarah Gordon with the Center for Financial Services Innovation. If you need technical assistance during the webinar, please call 1-800-442-4614. And you can submit a question at any point during today's webinar for the Q&A portion. Just click on the Ask a Question icon and submit your question. With that, I'll turn things over to Max.
Thanks, Nicole. Good afternoon, and thank you for joining us. I want to start by saying that I'm grateful to the Center for Financial Security for giving me the opportunity to discuss recent developments in consumers' use of mobile phones for financial management and decision-making, and to share with you some of the work the Board has been doing to monitor developments in the area of mobile financial services. Of course, I need to begin with the disclaimer that this presentation represents my own views and not those of the Federal Reserve Board or any part of the federal government. Next slide, please. So I'm on the motivation slide now. The motivation for our work in this area has been the rapid evolution of how consumers access financial services. In only a few years, mobile banking has become a common means of interacting with financial institutions, and making payments from your mobile phone is now possible and increasingly prevalent. This just-in-time access to financial information and new means of payment has the potential to affect both consumers' finances and consumer financial behaviors. These technologies may also provide a means of expanding financial access to underserved populations. Next slide, please. For several years, the Division of Consumer and Community Affairs, in which I work, has been monitoring developments in mobile financial services with a particular interest in how these technologies could affect consumer financial well-being and potentially be used to expand financial access to underserved populations. In 2011, we decided to deploy a survey to consumers to assess their use of these technologies and their perceptions of the technologies. A second survey was deployed in November of 2012 to monitor changes in the use of mobile financial services since our previous survey. I will be discussing the results of the 2011 survey, but a report describing the findings from the 2012 survey will be released next month, and I'm certainly happy to provide a link to Nicole or distribute it to the email list if anyone is interested. The survey I'll be discussing today was deployed on December 22nd of 2011 through Knowledge Networks. They have a nationally representative probability-based online panel. The survey was in the field until January 9th, 2012, so you can think of these estimates as representing the state of the market from December 22nd, 2011 to January 9th, 2012. And we collected a total of 2,290 responses. In March of 2012, we released a report summarizing the results of this survey, and in September 2012, we released a Federal Reserve Bulletin article describing the potential for mobile financial services to expand access to the unbanked and underbanked. These reports are available on the Board's website using the links I have placed on slide 4. Next slide. So in terms of the presentation outline, I'm going to first discuss consumers' use of mobile payments and mobile banking, followed by a brief discussion of the potential for mobile to expand financial access to the and underbanked. And lastly, I will discuss how consumers are using their mobile phones when shopping. Next slide, please. Now, before diving into the details, I would first like to highlight some of our key findings. Among all mobile phone users, so that is anyone with a phone, whether it's a feature phone, a regular old phone, or a smartphone, 21% reported that they used mobile banking, as we defined it, in the past 12 months. 12% also reported using mobile payments, in the past 12 months. When we restrict the sample to smartphone users only, which is 44% of our sample, or was 44% of our sample at the time, and these individuals we'd expect to have higher rates given that it's much easier to do mobile banking or mobile payments on a smartphone, we find that 42% have used mobile banking and 23% have used mobile payments in the past 12 months. Now, while I can't yet reveal the exact findings from our latest survey, I can tell you that the use of mobile banking has increased substantially over the past year. I can also tell you that the use of smartphones to make payments at the point of sale has increased substantially as well. Next slide, please. So in this section, I'm going to be discussing mobile payments. And next slide, the mobile payments definition. slide. For the purpose of our survey, the way we defined mobile payments was rather broad. This was done to capture the wide range of payment-related activities people are now doing with their phones. And given that the use of mobile phones to make purchases at the point of sale remains relatively infrequent, that is, people actually going to the cash register and using their phone instead of credit card, debit card, or cash to make a payment, still relatively infrequently done. Our definition of mobile payments was purchases, bill payments, charitable donations, payments to another person, or any other payment made using a mobile phone. These payments could be made by accessing a web page on your mobile browser, sending a text message, or using a mobile app. The payment could be charged to your phone, such as a Red Cross text message donation, or charged to your credit card, or withdrawn from your bank account either through a debit card or through a direct charge to your account. Next slide, please. So the next several slides show the demographic distribution of mobile payment users. We'll have a similar set of slides for mobile banking users. This one shows the distribution of mobile payments users by age. Now, the first row shows the age distribution for all mobile phone users. So, for example, there are 22.4% of all mobile phone users are ages 18 to 29, and 23.7% are ages 60 plus. The second row, or the no row, shows the percent of people of various ages who do not use mobile payments. And the third row, the yes row, shows the distribution of ages for mobile payments users. So here you can see that 37.3% of mobile payments users are ages 18-29. Now the way to make sense of these bars is to compare the yes row to the total percent row. And you can see that while those ages 18-29 make up only 22.4% of the mobile phone user population, they make up 37% of the mobile payments users population. So they're relatively overrepresented in the mobile payments users. So basically what this bottom row is showing is that mobile payments users, on average, are much, much younger than the average mobile phone user. So you can see the majority of mobile payments users are under the age of 45. In fact, the vast majority are under the age of 45. In contrast, you can see that only 10% of the mobile payment user population is age 60 plus, relative to about 24% of all mobile phone users. Next slide, please. So here you have the distribution of mobile payments users by race. The main thing I would suggest you take away from this is that minorities, the Hispanics and African Americans in particular, appear to be much more likely to use mobile payments than their share of the mobile phone user population would suggest. So, for example, the Hispanics, or purple group, are 13% of all mobile phone users, but 21% of all mobile payments users. Similarly, you have African Americans making up 11% of all mobile phone users, but about 13% of all mobile payments users. Next slide, please. Now, on our survey, we asked people about how they made their mobile payments. That is, where was the payment charged to? Was it charged to a debit card, a credit card, a prepaid card, a bank account? Did you use some sort of intermediary service such as PayPal or Google Wallet, iTunes? Did you have it charged to your phone bill, such as the text message donations we discussed earlier, or did you use some other method? Now, the reason we wanted to look at these different ways of paying is that they have different regulatory protections, different risks to the consumers, and so we were interested in what was the main way people were paying. And in fact, it looks like people are using, underlying their mobile payments, people are using the standard set of payment mechanisms. 2/3 of the payments were made using a credit card, debit card, or a prepaid card. Now, next slide, please. When we then asked people, we gave them a list of all possible things they could do with their mobile phones. We asked them, what would you be interested in doing with your phone if these options were made available to you? About 48% of people, in the most frequent response, was compare prices when shopping. So people seem to be very interested in using their phones as a price comparison tool while shopping. People also indicated, about 33% of people indicated that they were interested in receiving offers and promotions based on their location on their mobile phone. There's also some interest in tracking their finances on a daily basis and receiving and managing coupons and discount offers. So people seem to be quite interested in using their phones as a tool when shopping, either for tracking coupons, getting discounts, getting promotions, or comparing prices. Now, when asked about using it to buy things at the point of sale as the actual mechanism of payment, we see only about 25% of people indicated that they had an interest in doing so. We also asked about using it as other things like a membership card or photo identification, purchasing tickets, and so on, and these were relatively of lower interest to people. Next slide, please. Now, the people who were not using mobile payments, what their main reasons for deciding they weren't interested in using that technology were. The primary reason was that they were concerned about the technology. That is, they were concerned that by using mobile payments, their payment information would be disclosed. They would put their personal financial information at risk. So 42% of people who were not using this technology indicated that this was a concern and a reason why they were not adopting the technology. Now, another major reason was that people just didn't see any benefit in using mobile payments, or they just found it easier to pay with cash, credit cards, or debit cards. So in the U.S., we have a relatively advanced payment system. It's very easy to whip out a debit card or a credit card and make a payment at the point of sale. And so to go through the trouble of actually setting up a mobile phone to make these payments and taking all the technological risks associated with that, people are really going to need to see some kind of value proposition there. They're going to need to, for example, be able to track coupons or membership points or have some other convenience added to this technology in order to really make it worth their while to go through the trouble of setting this up. And you can see this in the number of mobile wallets that have been set up. They always tend to couple the payment technology with coupons, location-based offers, membership rewards points, and things like that. So you can see the rest of the reasons for using not using mobile payments. Some related to lack of trust, some related to a lack of having the actual feature on their phone, not having smartphones, and so on. Next slide, please. So we were interested in what people's specific security concerns were with the use of mobile payments. And the most frequently given answer was, at 46%, hackers gaining access to their phone remotely. So people were actually concerned with people hacking into their phones remotely and gain access to their personal financial information. About a third of people were also concerned with when they paid for something, their payment information, their credit card, debit card, bank account information would be intercepted or stolen. Remarkably few people, only 17%, were concerned about having their phone lost or stolen. And you might think that this is actually a far more common way in which people would lose their personal financial information. The chances of you actually having a hacker hack into your specific phone, relatively low. Same with intercepting payment information, but people lose their phones or have their phones stolen all the time. And you can see the least common answer was having malware or viruses installed on their phone, which again might be more common, certainly was probably more common than having hackers gain access to their phones. So some issues with how people perceive the security of this technology. Next slide, please. So in this section, I'm going to be discussing mobile banking. And next slide, please, the mobile banking definition. Here, we define mobile banking as using a mobile phone to access your bank account, credit card account, or other financial account. Now, this was not using your mobile phone to call in to get information. This was actually using an app or a web browser, using text messaging to gain access to your bank account. Next slide, please. Here again, you see one of our demographic distribution slides for the use of mobile banking. And again, the contrast in terms of the use of this technology by the young versus the old is even more stark here. 44% of people using mobile banking are between the ages of 18 to 29, so almost twice their share of the mobile phone user population. In contrast, only 6% of people ages 60 plus are using mobile banking relative to being 24% of the mobile phone user population. So again, this is a technology that is much more heavily used by young people than by older people. Not surprising. Next slide, please. Again, when you look at the distribution by race, you see that minorities are far more likely to be using mobile banking than are non-Hispanic whites. Here, 17% of Hispanics report using, Hispanics make up 17% of the mobile banking population, but only 13% of the mobile phone user population. And African Americans make up 16% of the mobile banking population, but only 11% of the mobile phone user population. Next slide, please. So here we asked about the various banking activities that people have done with their mobile phone. And you can see that by far the most common use of mobile banking is to check your account balance or check recent transactions. So what people mainly do with mobile banking is just check their accounts. So 90% of people who use mobile banking have done so in the past year. We also see that about half of people are using their bank's mobile application. The other half presumably are using either text message banking or going through the bank's website rather than through an app. People are frequently using mobile banking to transfer money between their accounts. 42% of the mobile bankers indicated they've done so in the past 12 months. And about a third of people are receiving text message alerts from their bank. And about a quarter were using their bank's website, mobile website, to make bill payments. You can see in this slide that only 11% of people at the time had used their phone to deposit a check into their account. However, this has become much, much more frequent in the past year. Many large banks have launched this feature, including Wells Fargo. And so it's, again, much more common to see this happening now in our more recent survey than we did a year ago. Next slide, please. Now, when we asked people what kind of text message alerts they received, two-thirds indicated that they received low balance alerts on their account. About a third indicated they received payment due alerts. About 30% indicated fraud alerts, and then some kind of other alerts. Only 3% indicated they got savings reminders. So really infrequently people receive savings reminders. Now, we were interested in these people who were receiving low balance alerts. Next slide, please. And so among those who received these low balance alerts, we asked, well, what did you do when you received this low balance alert? And the options were transferring money into the account with the low balance, and you can see 58% of people indicated that they'd done so in response to receiving a low balance alert. 41% indicated that they reduced their spending. 16% said they went and deposited money into the account. And only 16% indicated that they did nothing in response to receiving one of these alerts. So 84% of people who received a text message alert about a low balance indicated that they took an action in response to receiving that message, suggesting that this technology has potential to change consumer behavior and potentially help them engage in good financial practices. Next slide, please. Now, again, we asked people who were not using mobile banking what their concerns with the technology were and why they weren't currently using it. And here, the far most common reason of 57% of those not using mobile banking was that their banking needs were simply being met with existing technologies. They were quite happy to use ATM, go to the branch, use the telephone, use online banking. They didn't feel the need for mobile banking to complement those set of services. The second most common response was, again, concern about security. So they felt that 48% of people felt that the security of mobile banking wasn't that great and put their financial information at risk. We also see, far less commonly, people having concerns about the technology properly processing their transactions and various other concerns. Next slide, please. Now here we ask people to rate how they perceive the security of mobile banking for protecting their personal information. So that is, how do you perceive the technology overall? Do you think it's very safe, somewhat safe, unsafe, don't know? And here you can see that about a third of people perceive the technology to be very safe or somewhat safe. Another third perceive it to be somewhat unsafe or very unsafe. And over a third indicate that they simply don't know how secure this technology is for protecting their personal information. So again, you get a sense that people really aren't sure about the security of this technology, don't understand the technology and the security risks it presents. And so there may be some need for education around this technology and the security risks possessed. It's far more likely that something would happen to your personal phone through you losing it or it being stolen and someone gaining access to your information that way than many of the other ways people are having their phone, are concerned about the security of their mobile banking technology. So next slide, please. Here I want to discuss briefly some of our findings related to the unbanked and underbanked and their use of mobile financial services. Next slide, please. So in terms of the definitions for unbanked and unbanked people are when the self or spouse does not have a checking, savings, or money market account. Underbanked meant that they or their spouse has a checking, savings, or money market account, but they have also used at least one financial service in the past 12 months. Now, the set of alternative financial services we considered were an auto title loan, a payday loan, a check cashing service, or a payroll card. Next slide, please. Now, 78% of our sample were fully banked, that is, they had a bank account and hadn't used an alternative financial service in the past year. 11% were underbanked, that is, they had a checking, savings, or money market account, but did use an alternative financial service, and 11% indicated that they did not have a bank account. The underbanked were more likely to be ages 30 to 44, less educated, minority, lower income, earning under $40,000 per year, and working or self-employed. The unbanked were more likely to be much younger, 18 to 29, less educated, not a homeowner, not married, minority, and very low income, so under $25,000 per year in income. They were also more likely to be laid off or looking for work, so unemployed. Next slide, please. Now, our interest in the unbanked and underbanked and mobile phones is that mobile phones are relatively ubiquitous. 9 out of 10 of the underbanked actually had a mobile phone, and 57%, more than the general population, had a smartphone. Moreover, nearly 3 out of 10, or 28%, had used mobile banking in the past 12 months. Another 22% indicated some interest in using mobile payments in the past 12 months. And so this population seems to be familiar with mobile phones, have mobile phones, and be interested in using them for financial transactions. And so the extent to which we can extend financial services through mobile phones, this may be a way of reaching individuals who don't necessarily have access to financial services in brick-and-mortar shops, or a way of preventing them from using financial services that may not be in their best interest. So, next slide, please. In terms of the unbanked, again, you see a relatively high prevalence of mobile phone ownership. 3 out of 5 have a mobile phone, and 26% have smartphones. I will tell you that the percentage of the unbanked who have smartphones increased substantially in the past year. In general, smartphone ownership has gone up significantly in the past year. Now, in terms of the usage of these phones for mobile financial services, you see that 12% of the unbanked had used their mobile phone to make a mobile payment in the past 12 months. Next slide, please. So now I just wanted to briefly discuss how people are using their mobile phones to shop. Next slide, please. So this is the one teaser slide I'll give you, previewing some findings from our current survey. Here I'm showing you comparing the levels of use of mobile phones to comparison shop over the internet while at a retail store. So this is compare prices in store. Use a barcode scanning application on a mobile phone while shopping to find the best price for an item. So taking out that app and scanning the barcode and having it pop up with the cheapest location to purchase this item is Amazon or Best Buy down the street or Staples or whatever. And then the last question I'll use here is use their mobile phone to browse product reviews while shopping at a retail store. So you can see across the board the use of these services has increased in the past year. You see now that about 42% of people are using their smartphones to comparison shop while at the store. I'll say that this is only among smartphone users, not the broader mobile phone population, simply because you can't do these things with a regular phone. And then, so you can see about 32% of people using the barcode scanning applications and 44% browsing product reviews in store and using that to make their decision about what products to purchase. Next slide, please. Now, we asked the people who were checking prices or reading product reviews whether this actually alters their decision. And in fact, it appears that these do in fact influence their decision. 65% of people indicated that comparing prices on their phone while at the store changed where they made the purchase. That is, they went to Best Buy, they checked the price on an item and found out that it was cheaper online, and so they purchased it online rather than at the store. And here you see 77% of people who had read product reviews while in store had used that to make their decision about what item they ended up purchasing. Next slide, please. Now, we also asked people about whether they used their phones to more directly make financial decisions about shopping. So did they use their mobile phone to check their account balance or available credit before making a large purchase? And this was asked of mobile banking users. And 67% indicated that, yes, before I made a big purchase, I had checked my remaining credit or available balance. And then of those who actually did this, checked their account balances, did you decide not to buy the item because of the amount of money in your account or the available credit? And here 60% of people indicated that, yes, they decided not to buy something because of the information they received on their phone saying their balance was low or they had limited credit available. Next slide, please. So to conclude, mobile banking is an increasingly popular means of accessing financial services. We have seen that as smartphone increases, the adoption of mobile banking and mobile payments will increase. Moreover, as mobile payments, the means of making mobile payments at a cash register become more common, people will increasingly adopt this technology, and as well as the services associated with this payment, the mobile phone payment increases, so too will the usage of this technology. We see that people, the main reason they've decided to stay away from these technologies is either security concerns or concerns that it's simply not useful or not convenient, or they're quite happy with the way they currently bank or currently make payments. And so, again, as I said before, to further increase the use of these technologies, people are really going to have to see a good value proposition and see the convenience in using it. So with that, I'll leave you with my contact information and turn it over to Nicole.
Great. Thank you so much, Max. And I just want to reiterate what Max said at the start. When the new results are released, we'll make sure that there's a link on the CFS website so everyone has access to that. With that, we'll turn things over to Jim Gatz. Jim?
Okay, thank you, Nicole. It's really a pleasure to participate on this call this afternoon. I'm a big fan of the Center for Financial Security and the good work you all are doing up there in Wisconsin. And I also want to stress that it's great to hear Max's voice. I see him from time to time. It's good to hear your presentation, Max, and I'm looking forward to hearing Sarah Gordon from CFSI also. I just have a few things to say to add to Max's presentation. It's a really interesting snapshot of the current use of mobile banking and mobile payments generally. But the research he's describing is particularly important in pointing out the reality and the potential that mobile technology has as a platform for enabling many more people to get access to financial services that they need. As Max has highlighted, mobile phones and tablets and other devices that are still on the drawing board, that haven't been invented yet, but they're going to be here soon, they are having immensely useful for providing information and guidance and analysis and nudges that help people make more informed financial decisions, more informed decisions about their life choices. So this technology and the use of mobile technology in particular is so important. And it's a key topic, a key focus of our work at the Office of Consumer Policy here at the Department of Treasury. So I want to take a few minutes to tell you about that work and the priorities of the office and invite you all to be with us in this work. We're interested in hearing from you and to working with you on these important topics. I guess you go to the second slide there, Nicole. In general, the office leads the Treasury Department's work to promote access to safe and affordable financial products and services and to clear information that can enable people to make sound financial decisions. We're engaged in a number of policy areas, policy development in the areas of consumer financial education and capability, emerging payments platforms, such as the mobile payments that we're talking about today, technology that improves consumers' financial choices, and then systems to further privacy and data security that's so important in this area. Now, in support of the work that we're doing, the office also provides leadership for the Federal Financial Literacy and Education Commission and coordinates the President's Advisory Council on Financial Capability. It also is a leader in an Obama administration multi-agency effort, a task force on smart disclosure. In short, we develop policy to support consumer-focused financial services innovations that help Americans take control of their financial lives. Just the next slide. Just want to take a few minutes to talk about our focus our big picture focus and support for new technologies and innovations in the financial, in the field of financial services. First, technology is vastly reshaping our lives. Let's just stop and think about that a minute. Just think about it. Over the past 7 or 8 years since when the iPhone came on the scene, we've all changed the ways we talk on the phones. We've changed the ways what we do in terms of many different things in our lives. We drive with satellite guidance assistance on our cars these days. And some of us read books and news and the latest gossip on our electronic devices. And we can work remotely thanks to email and laptops. A friend of mine has a phone that she talks to, and it talks back. All this is in the last 7 or so years, and it's changing the way we do business. It's important for us all to realize that technology presents an opportunity to develop new financial products and services and decision-making tools for people. And at the same time, it prevents the promise to reshape financial services industry in a way that is inclusive and safe and accessible. The Internet provides a lot of information, a lot of financial information, and it enables a huge portion of the population to have access to tools that can help them with their financial decision-making. Individuals can quickly find budgeting resources. They can find financial comparison sites. They can find products to help them avoid fees and to monitor their transactions. And they can find other products such as those geared to savings and credit and investment and insurance. And the Internet is making those types of services, that information available to a lot more people. And mobile phones are expanding that opportunity even further. As Max pointed out, phones give people all the resources that are available through the Internet. In addition, the power to access information in real time at a point of purchase. An example of that is simple text messages that can be used to deliver account balances and alerts that Max talked about. Alert people when their accounts are low, so that they can make decisions about their purchasing, about what to do about their low balances on their accounts. Help them avoid paying unnecessary fees and experiencing embarrassment at the checkout line. Mobile phones also can be used to protect people from fraud because they can offer the ability to embed security and authentication elements, and in the future even biometric capabilities and video capabilities that can help reduce fraud. Smartphone applications or apps are really the next frontier for providing tools that can be personalized to the individual. Apps often use data about individuals to help those individuals make smarter, real-time financial decisions and help them achieve their future financial goals. As stressed in Max's research, the penetration of smartphones in particular poses a real opportunity to increase access to financial services for underserved populations, notably low-income and minority households, those demographics who are traditionally the hardest to reach through financial education efforts. The next slide. So what are we doing in support of these innovations? Our office is engaged in several projects to learn more about how smartphones and other mobile devices can be used to increase financial capability. One major effort last summer and into the fall was the My Money App Up Challenge, which was a contest that we co-sponsored, which offered cash prizes and recognition for the best mobile app ideas and designs to help Americans make smart financial choices, to access high-quality financial products and services, and ultimately control and shape their financial futures. We, Treasury, co-sponsored that challenge with the Center for Financial Services Innovation and the Doorways to Dream Fund, two of the best co-sponsors that we could have chosen for that. They really helped make the challenge a great success. It included two components: a contest that was soliciting ideas for new apps, and then a second part of the challenge was about ask people to to design apps, to submit comprehensive app designs for their with their proposals. We received more than 400 ideas and app designs from people all across the nation and from all walks of life. And the response to that competition, thanks to CFSI and D2D, really illustrates that mobile technology captures many Americans' imaginations, and that mobile tools can be a platform to enable people to access the information that they need. Another important part of our work is that we recognize that these sorts of innovations will be limited without the data to fuel them. So the Office of Consumer Policy is working to help expand consumers' access to data that can enable more relevant and effective financial capability tools like the apps that we talked about in the challenge. And we call this approach smart disclosure. We're working with many other federal agencies to identify and make accessible public data that can be harnessed for financial capability tools. Government data is already helping to seed innovations in the area of financial capability. And I'll give you a couple examples. One startup firm has built a service that helps employees better understand their retirement plans or 401k plans by using data from the Department of Labor. Another startup is providing a service that monitors people's debit cards for suspicious charges. They do that by drawing on data sets, including a recently new data set that was launched by the Consumer Financial Protection Bureau. It's a credit card complaint database. So these are two examples of where entrepreneurs are using government data that's becoming available to them to help people in their financial decisions. The third thing that we're working on is research. As technology reshapes the landscape of financial services, our office remains committed to finding new ways to empower individuals with tools and information. And as part of our work with the Financial Literacy and Education Commission, we are working with federal agencies to explore and test new strategies for providing financial education resources, particularly to young people. For example, we're conducting research on whether children in elementary schools can learn more about money management when they have access to a school bank or credit union account. We also expect to learn about whether financial education in the classroom leads kids using these accounts more actively to develop good savings habits. We're looking forward to sharing the ideas with all of you as more communities across the country expand financial education in schools as part of the Commission's work. In closing, I just wanted to underscore that the Office of Consumer Policy is committed to looking around the bend at what's coming up, how the landscape of consumer financial services is changing, and how policy and regulation can be developed in a way that enhances and encourages innovation, not stifles it. We're excited to work with groups like yours around the country in this work and explore how technology can help to empower consumers with their finances. And again, I just want to underscore how important this research is that Max has described for us today, and we're all looking forward to the new research that's coming out next month. Thank you.
Great. Thanks so much, Jim. Now let's turn it over to Sarah Gordon with the Center for Financial Services Innovation. Sarah?
Great. Thanks, Nicole. Good afternoon, everyone. I'm Sarah Gordon. I'm the Vice President of Advisory Services and Nonprofit Investments at the Center for Financial Services Innovation. And it's a pleasure to be here today. I appreciate Nicole and the CFS team for organizing the webinar. And I want to start by acknowledging what a great contribution the Fed's research has been to the field and the broader financial services industry. The baseline data in 2011 was incredibly insightful, so we feel it's even better that they've gone back out to survey again to really enable us to look at trends over time. And I also want to congratulate Jim and the Office of Consumer Policy at Treasury and the leadership that they've demonstrated in the area of mobile financial services. They're an incredibly forward-thinking bureau within our federal government, so we applaud them as well. So I just wanted to take a few minutes today to share CFSI's perspective on the topic of mobile financial services and its promise, and a few of the initiatives that we've been engaged with in this arena. I'll start by giving just a quick overview of who we are at the Center for Financial Services Innovation. We're a nonprofit organization that was founded back in 2004, and our mission is really to transform the U.S. financial services marketplace to help underserved consumers achieve financial prosperity. And we do our work in a variety of ways. We conduct both consumer and market research. We provide strategic advice through roundtables, through our annual conference, through one-on-one consulting and technical assistance to a variety of entities across the broad financial services industry. Certainly, we invest in promising new both for-profit and nonprofit solutions that we think are best practices for serving underserved consumers both profitably as well as responsibly. And finally, we advocate. We are informing and influencing federal policy that we see as affecting the provision of financial products and services for underbanked consumers. Next slide. So when we think about mobile financial services, we truly feel like Max and Jim have pointed out that they can have a tremendous positive impact on increasing access to high-quality financial products and services, as well as promoting the financial capability of underserved consumers. And they can offer new revenue streams and enhance consumer loyalty to providers of those products and services. In a 2011 report that CFSI put out entitled Reaching Underbanked Consumers Through Mobile Services, we identified 5 key benefits of MFS for the underbanked. The first, which I'll talk a bit more about in my remarks, is that mobile financial services can drive increased financial capabilities. They can help consumers make more timely financial decisions and improve their financial behaviors and financial outcomes. Secondly, as Max highlighted, mobile financial services offer greater convenience to consumers. It's a device that's in your pocket. There's near ubiquitous ownership of mobile phones and increasingly smartphones. They're multimodal, meaning you can text, you can email, there are apps, there are cameras, there are video. The range of actions that you can take with a mobile phone continue to increase. And they're highly personalized, meaning that it contains all sorts of individual information that can be helpful in making financial decisions. The third benefit is we heard some concern through the survey research about security, and I would posit that that's similar to what we saw 10 to 20 years ago as we saw ATMs come out into the marketplace, as well as more recently with online banking. And we suspect that the security and fraud concerns will continue to decrease over time. We would argue that mobile might even enhance security and fraud protection via sort of enhanced authentication, alerts, and dynamic PINs. So over time that your financial information might be more secure by making payments and doing your banking through a mobile phone. And then we're seeing the transition that mobile financial services can help transition customers from cash to electronic transactions. That reduces costs for both consumers and providers. And finally, we're seeing mobile as a new platform to really improve access to financial accounts of various types. The next slide. Both Max and Jim touched on a lot of this, that we see mobile financial services as potentially driving increased financial capability of consumers. Mobile provides more timely access to account information through apps, text messages, and can really deliver information that enables consumers to make more informed choices about how and when they spend, borrow, and save. The chart on the slide outlines many of the different kinds of services that are delivered through the mobile device. I'm particularly encouraged by the data that the answers to the survey questions about the actions that were taken as a result of getting a low balanced alert. That those numbers are particularly encouraging, suggesting that the mobile device can be used to deliver information that is then actionable for consumers. We hope that we see the same thing, and that will hold true in two projects that CFSI is supporting in this area that I'd love to share a little bit more about. If you go to the next slide, through our Financial Capability Innovation Fund, we're supporting an experiment with Clarify, which is a nonprofit credit counseling agency out of headquartered in Philadelphia. They're working with Innovations for Poverty Action, a research firm out of Yale, and they're essentially examining the impact of delivering text alerts to remind people who are on debt management plans. They sort of consolidate and help consumers better manage, get them on a one-payment plan to better manage their debt, and they noticed that people were falling off before the 5-year completion or the 5-year term, and thought, if we were to send reminders that and vary the messaging to test different types of messages, both goal-oriented as well as task-oriented, would that help people stay on track? So this has been an experiment that they've been running for about a year and a half now. There are about 500 people into the 1,000 that they want for the randomized control trial. But I would say what we've seen so far is that few people are opting out of the text service. People don't seem to mind getting the text messages, whether they're helping nudge people towards repayment on time. That still remains to be seen, but we are very hopeful. Next slide. A second sort of pilot that we're behind is Piggy Mojo. It's a really clever new innovation that we've seen that's essentially an individual signs up, sets a savings goal with a partner, and they're creating impulse saves instead of impulse buys. So the idea being, when you decide to forego the $4 cup of Starbucks in the morning and drink the drip coffee at the office, you've just made an impulse save. So you text, $4, no Starbucks, into Piggy Mojo, and then Piggy Mojo will move the funds from your transactional account into a savings account. The next piece of this, which is, I think, particularly exciting, is then my savings partner receives a text message that says, Sarah just made a good save. $4 saved on her morning coffee. You still have $50 to go towards your weekly goal. What have you saved today? So not only is it leveraging the technology, it's also leveraging peer pressure and peer support and automation to help cement this idea of impulse saving. So we're really interested in the technology, the texting part of it, as well as the social part. And I should point out that Piggy Mojo is now in market with Magic Johnson and One West Bank to offer the Magic Mojo product on the Magic card, which is a prepaid, general purpose reloadable prepaid card. I mentioned that, sorry, next slide, Nicole. In addition to mobile financial services is one way to improve financial behavior and increase financial capability. We're also hopeful that mobile can improve access to financial accounts. This is an area that we've seen a lot more activity in the developing world and less so here in the United States. If you've looked around internationally, you've likely come across M-Pesa, which is a mobile phone-based money transfer and microfinancing service in Kenya and Tanzania. This is by far the most developed mobile payment system in the developing world, and it allows users with national IDs or passports to deposit, withdraw, and transfer money easily with a mobile device. We haven't seen a direct parallel of M-Pesa in the U.S. That's largely because our banking infrastructure is much more significant here, and that we've also seen prepaid, general purpose reloadable prepaid cards have really become the primary account alternative in the U.S. What is exciting is that we're seeing many of the leading prepaid card providers start to integrate with mobile phones and look to offer their products via mobile app should they, and we think that this holds a lot of promise and can help promote increased financial access and inclusion in the United States. Next slide. So Jim mentioned the My Money App Up Challenge, which was launched by Treasury in partnership with D2D and ourselves here at CFSI, which was a contest really intended to motivate entrepreneurs, software developers, the public, students, et cetera, to propose the best ideas and designs for next-generation mobile tools that help Americans control and shape their financial futures. We were thrilled with the outcome of that, and it led us to take it one step further to launch, and if you move to the next slide, the FinCap Dev Financial Capability Development Competition, which is a nationwide challenge to really develop and incubate actual market-ready mobile apps that would help working Americans make smart financial choices and to gain better access to financial products and services. So we're very much in the middle of this competition. We have narrowed it down to the top 13 ideas, and I encourage you to check out the FinCap Dev website where you can read more about many of those ideas. We'll be giving cash awards to the top entrants in June. But I think it's really exciting that folks even outside of the financial services industry are starting to realize that there's a huge opportunity to better leverage technology and the mobile channel to really help a segment of the 1 in 4 U.S. households that are financially underserved to gain better access and to help them in improving their financial behaviors. So we're excited about this challenge and all of those involved, and encourage you to become part of that ecosystem of interested parties who are sort of helping promote the cause. So with that, I will conclude my remarks and turn it back over to Nicole.
Excellent. Thank you so much, Sarah. So there's still time to submit questions. I'm going to go ahead and start, though, with the questions that have already been submitted for us. So this first one, let's see, Max, if you can chime in here. Did you ask if respondents had access to internet at home with a personal computer? It seems clients that I work with have smart mobile phones but do not have personal computers and high-speed internet services at home.
So yes, we do actually know how many of them have internet. So about 92% of them had internet. And we also asked where they primarily used the internet, if it was at the library, at school, at work, at the home. And there were a fair number who indicated that they got it through school, work, or the library. So yes, there are definitely people who don't have internet at home and are instead using their mobile phones as a replacement for the internet. Rather than having internet on their computers at home, they just use it on their cell phone.
Okay, great. And I'll open this up to the group. Can you comment, is there any ongoing research related to the use of mobile technology in managing mortgage payments? There seems to be a large overlap between the populations using mobile phones and those who are underbanked.
So I'm not aware of anything, this is Max, I'm not aware of anything on that particular topic. We certainly didn't ask anything related to mortgage management.
Okay. Okay, then the next question, this one just came in. Have any of the panelists, did you want to comment on greater barriers to mobile banking, and that's opening an account? Someone might not have adequate ID, might be in the check system, or they don't trust banks because of hidden fees. Mobile banking is a great idea, but how do we reach the unbanked who don't feel they can even open an account?
So this is Sarah. I'll jump in and attempt to answer this one. I think we spent a lot of time at CFSI exploring general purpose reloadable prepaid cards as an alternative to your traditional checking or savings account product for several reasons. And mainly, sort of high level, is that many of the barriers that we've seen preventing access to the traditional products aren't there with prepaid. There are no, because essentially prepaid, you're only able to spend the good funds that are loaded on them, and it reduces the institution or the provider's risk. So, you rarely, prepaid cards don't require a credit check or check systems. Many of them accept sort of alternative forms of ID or for opening. So many of the barriers are eliminated with that product. And I think, like I pointed out there at the end, we're seeing a lot of those providers really think about distribution through the mobile channel. You can sign up for prepaid cards online. So if you have a smartphone equipped with a web browser, you can start the process that way. So we see a lot of promise and potential there in terms of the combination of prepaid and mobile.
Great.
I'll also add, Max, that the FDIC had a Safe Account pilot project where they waived issues with the check system, and they also made sure the accounts were low cost and low risk. So if that pilot expands, there's certainly accounts like that available that may allow underserved consumers to get back into the mainstream financial system.
Great, thank you. Well, with that, we are nearing the end of the webinar, so I'd just like to take a moment to show here that our next webinar is going to be on Tuesday, March 12th, same time, and that will be Advancing Evidence-Based Policy, Getting Your Research Across to Policymakers. Karen Bogenschneider, who is a CFS affiliate, will be presenting that webinar. But right now, I'd like to thank Max, Jim, and Sarah. They have all been great partners to the Center, and we appreciate their time and efforts in the financial capability field. Today's webinar will be archived at cfs.wisc.edu within 1 week, and that will include an archive to the video as well as the presentation slides. Thank you, everyone, for participating, and have a great day.